The period leading up to the end of the financial year is an excellent opportunity to consider if you might be eligible for the instant asset write-off. The instant asset write-off is one of the most widely discussed tax benefits for businesses since it allows them to acquire assets and claim an instant tax deduction. What exactly is an instant asset write-off? This provision allows eligible companies to claim an immediate tax deduction for the business component of an asset's cost when the asset purchased is first used or installed and ready for use. This accelerated depreciation allows a company to lower its taxable income by deducting eligible purchases. It results in a cash flow benefit relative to the tax rate payable by the organization. The best part is that it can be utilized for many assets if the cost of each purchase is less than the applicable threshold for new and used assets purchased. How does instant asset write-off work? This tax break is not a cash handout from the government. It is a tax break that lowers your company's taxable profit. The asset must get used for business purposes to claim the full tax deduction. Example. Here is an example of how you can use the instant asset write-off to lower your taxable income, free up funds to further invest in your business. A small business has a $1,200,000 turnover and a net taxable income of $240,000. The organization pays the company tax rate of 25%. 1. Total tax payable. The total amount of tax payable is $60,000, calculated as follows. Company tax rate of 0.25 multiplied by net taxable income of $240,000 equals tax payable of $60,000. During the financial year, the organization purchases $75,000 of eligible assets under the instant asset write-off scheme. The total asset value is subtracted from the net taxable income to arrive at a reduced taxable income of $165,000, calculated as follows. Net taxable income of $240,000 minus purchases of eligible assets of $75,000 equals reduced taxable income of $165,000. 2. Reduction in total tax payable. The total tax payable is reduced by $41,250 due to the instant asset write-off scheme, calculated as follows. Company tax rate of 0.25 multiplied by reduced taxable income of $165,000 equals total reduced tax payable of $41,250. 3. Tax savings. The tax savings by claiming the scheme's deductions would be $18,750, calculated as follows. Total tax payable of $60,000 minus reduced total tax payable of $41,250 equals tax savings of $18,750. 4. Actual assets cost after tax savings. With the tax savings, the actual cost to the organization for purchasing the assets is $56,250, calculated as follows. Purchases of eligible assets of $75,000 minus tax savings of $18,750 equals actual assets cost after tax savings of $56,250. What is the purchase threshold for the instant asset write-off? Businesses can claim an immediate deduction for the entire cost of an asset up to $150,000 under the instant asset write-off scheme. The $150,000 threshold gets applied per asset. If each purchase is less than the threshold, there is no limit to the number of assets that can get claimed as a tax deduction under the instant asset write-off scheme. Companies having an aggregated turnover of $50 million to $500 million may be entitled to deduct the total cost of qualified second-hand assets that cost less than $150,000. If you are getting some value in this video so far and find it helpful, click on the subscribe button and the notification bell to receive more business tips in the future. Which assets should you think about buying? Before making any significant acquisition, consider how the asset will affect your business. Your decision to take advantage of the scheme should get based on your current needs and your company's expected expansion. For example, as part of your long-term business plan, you may intend to extend your production capacities with new equipment. In that instance, the instant asset write-off scheme offers a chance to lower the cost of expansion. You should buy assets that will assist you in reaching your business goals. The asset write-off scheme offers an incentive to invest in your business and decrease your taxable income. Examples of tax-deductible items. Some of the items you can consider purchasing are as follows. cash registers and other point-of-sale devices, motor vehicles such as cars, vans, and utes, fixtures and fittings, plant, machinery, and equipment, desktop computers and laptop computers, security systems. How can you take advantage of tax savings by getting a business loan? We understand that purchasing business equipment can be costly, so every business owner must understand when they can deduct their company's purchases. According to the Australian Taxation Office website, the Instant Asset Write-Off allows small businesses to claim an asset write-off. It applies to assets that cost less than the Instant Asset Write-Off threshold and are purchased and used in the year of claiming the write-off. The business loan can assist small businesses needing working capital to meet an immediate short-term demand or manage ongoing business requirements. How do I apply for a tax deduction? There is no need to apply. The write-off gets treated as a tax deduction when you file your tax return for the relevant financial year. Do you need some funding to buy assets quickly and save on tax? Click on the link in the description to claim your end of financial year offer. Eligible customers have a chance to claim zero-interest loans on unsecured funds above $30,000 for June. Terms and conditions apply. Disclaimer. This video does not constitute legal, business, financial, or accounting advice. All viewers must seek the assistance of qualified professionals as required. If you like this video, share the love by giving it a thumbs up. Hit the subscribe button and the notification bell to receive more like it in the future. Thanks for watching.